But that aside, let me just introduce and give you Mr. Francisco Campos, who is the Senior Economist for the World Bank's Trade and Competitiveness Global Practice. He's the thematic leader on gender and entrepreneurship for the World Bank's African Region Gender Innovation Lab, based in Maputo, Mozambique. His principal areas of expertise are linked to entrepreneurship, micro, small, and medium enterprises, innovation, competitiveness, financial inclusion, and gender. So it sounds to me like we've got exactly the person we need for this presentation. Francisco, looking forward to hearing you, and looking forward to everyone else who is listening jumping in with questions as we go.
Thank you so much, Wade. Hope everyone can hear me as well. So I'm Francisco Campos. Actually, the unit I work has changed names over time, and now it's called Finance, Competitiveness, and Innovation. But I've been working closely with the Africa Gender Innovation Lab, which studies what works and what doesn't work to actually help women's economic empowerment. And what I'm going to talk today is about a report we launched in March that hopefully you can see in the slides, that it's called Profiting from Parity, Unlocking the Potential of Women's Businesses in Africa. So this is basically a 2-year work of a lot of people in both my direct practice of the finance, competitiveness, and innovation, as well as a lot of people in the African Gender Innovation Lab of the World Bank, plus, of course, building on a lot of work that maybe you in this group or others have done over the years in terms of women's economic empowerment, and especially around entrepreneurship, which is the focus of this report, Entrepreneurship in Africa, trying to understand what are the gaps, the gender gaps in entrepreneurship in Africa, and what we can do about that. So building on a number of research that both the World Bank and others have been involved over the years. So I'll go through a presentation, but I do encourage you to just Google Profiting from Parity World Bank and download the report. So it's helpful, but I think it has much more than I can say here in this presentation, and hopefully will be helpful for a lot of what we do. But we are, of course, open to answer any questions you may have right now or even later. So my email is just fcampos@worldbank.org, so it should be fairly easy to just drop an email. So the first thing we found was that women participate a lot in the labor force in Africa. That more than other regions across the world in developing countries, and that is happening when we look at household surveys or enterprise surveys or even surveys we've been involved or others related to impact evaluations that focus on particular groups. We always find this trend of women entrepreneurs or women participate a lot in the labor force. So we don't see that there's a big gap there to think about. But in other regions that you can see in this graph, that is probably a big issue that needs to be tackled. What we also found early on was that not only women participate in the labor force, they half of the time, if they're not farmers, they actually are entrepreneurs. They go into self-employment or entrepreneurship operations, and that happens, I mean, for a number of reasons. But you can imagine that in the context of African countries where there's not a lot of wage jobs opportunities, women tend to then open business as an alternative in terms of raising some income. And that participation of women in entrepreneurship is high when you compare to men, and is also very high when you compare to other regions in developing countries as well. So no big gap there. What we actually have a big gender gap to look at is in terms of performance. So women-owned businesses in Africa, across the board, from different countries, are typically smaller, lower sales, lower profits, lower number of employees, lower performance than male-owned firms. So we have, on average, in the data sets here analyzed, where we go in more detail, in depth, a 34% difference in monthly profits. But if you use other data, or we have used other data as well, and the report mentions those in terms of household service or enterprise service, we found more or less the same general conclusion, that we have a big, large gender gap in business performance. And that matters, I mean, because it's 50% of the population with a high participation rate, but also more generally for the economy, it's important that women can break this, or that we can help women break this gender gap in business performance. So the report is about that. It's about defining what are the key factors that drive this gender gap in business performance. What are the underlying constraints that explain these different decisions that men and women take in terms of running their business? And then what we know that we can do about that. So that's a very large policy section that I'll discuss a bit later. So the first aspect associated with the large gaps in business performance is that when we do a decomposition analysis, we find that there are also large differences, for instance, in immediate factors associated with this business performance. So capital, labor, and sectorial choice. I'll go one by one very quickly, just to see what kind of gap we're talking about. So in capital, as you can see in the current graph, across countries, even after accounting by a number of factors that of differences between male-owned firms and female-owned firms, or between men and women in terms of their characteristics like age or education and so forth, there is still a very large, consistent gender gap in the capital invested in the business. And this, of course, will impact the size of the firms and the potential and the profitability of those firms. On labor, we also see a large gender gap in labor hours, not only in terms of number of workers that operate in male-owned firms versus female-owned firms, but also in number of hours of work dedicated by the entrepreneur themselves and also the people that work with the entrepreneur. This difference, as you might have noticed, is smaller than in capital, but still quite large across countries, across data sets, across different analyses that we've done throughout the report. And then on sectors, as you know, women tend to be concentrated in very few sectors, like commerce, hairdressing, some services like catering, and others, while men tend to be in more sectors. And those other sectors are typically more higher performance. And so what happens is that if we have this large difference in the sector choice, that's going to potentially also affect the performance of the business. What we found in individual studies in specific countries, and I saw some comment of someone from Uganda in the group. So when analyzing data in Uganda, we found that a few women actually cross over to male-dominated sectors. We've done a similar analysis in Ethiopia and a few other countries. And when women do cross over to this more high performance male dominated sectors, they actually, the women that do perform as well as men in those sectors and way better than women in traditional sectors. Of course, there's a lot more about this and how to actually help women circumvent norms and enter these sectors and to do that at scale, but there's an opening there that it's important to explore, and we've been doing that in a number of countries. And so these are the initial starting differences, as well as a few others on formalization and other aspects and business practices where you see large differences to start between male and female-owned firms. But behind this, or behind these decisions of how much capital invest, how much labor invest, which sector to choose, there are underlying factors. And so the report sets up a framework that you can see now in this slide about these underlying constraints that separate male-owned firms from female-owned firms. And we divided them in three large buckets. So contextual factors, endowments, and household level constraints. These constraints then are going to affect the strategic decisions taken by men and women, which then impact the outcomes and the gender gaps that I mentioned at the beginning. So on contextual factors, we have issues like legal discrimination still happening in a number of countries in Africa. We have social and gender norms impacting the decisions that men and women take in terms of their businesses. We have the risks of gender-based violence and how that affects, for instance, things like the sector you operate or others. And then we have endowments, which include aspects such as education, confidence, finance, and networks, which are key to start and grow your business when you want to start as an entrepreneur. And then we have a third level, which are around household level constraints, which include both aspects of the allocation of resources between men and women within the household. So that's going to affect their decisions of the type of business that they can run, as well as time constraints. If a lot of the burden of the household childcare is on the women, then that's going to affect the type of business and the potential growth of that business going forward. I'll mention in more detail a couple of examples of these underlying constraints, but the report goes in depth on each of them, studying the literature, but also what we know could be areas of entry in each of these underlying constraints. So for instance, on confidence and risk preferences, we have done an experiment in Kenya where basically we're looking at men and women's differences in competition entry. So we set up an experiment where the idea is on a mixed gender or environment, do women compete as much as men? So these will be the columns on your left in this, or right in this graph. So on the left, it shows that when competing, basically in this experiment, men and women will have to do a task which is typically associated with male. This is a mass task, and then they need to compete whether they with others in the group, whether they have think that they're actually going to win that competition. And so when we were doing a mixed gender environment, women are significantly less likely to compete than men. So in the standard mixed gender group, men are willing to compete in 69% of the case, while women only 31%. Even when we multiply by 10 how much you can win, and this is the high stakes group on your right, we see that there is still this large gender gap in willingness to compete. But when women are competing against other women, then they are significantly more likely to compete, not only against themselves, but getting much closer to the levels that men compete when they are competing against women. So this shows that when you have issues of, for instance, confidence early on that is built about what the assertiveness of men and women in your childhood, that's going to potentially affect your willingness to compete, which then affects perhaps decisions like the sector, the capital, the growth of your business. So this is a key area. Another one that a lot of people talk about is finance and access to finance. What we found is actually that because of the development of microfinance, we don't see very large differences between men and women in the entry into finance. So women do get credit almost as much as men. Where we see large differences across countries is in the amount of those loans. So women tend to have a lot of credit within microfinance or small scale, which then affects the potential investments in their capital, while men have more access to different types of finance at a larger scale. And again, for instance, in Uganda, while for every $100 that men would get, women would only get $40. So this difference is going to affect the actual decisions that the women and men take throughout the business. So now what matters then is like, what could we do about it? And a lot, for instance, here in finance could be around the issue of collateral. So while men tend to have the registration of property, women don't have collateral to use for getting loans. So then what can we do about that? What alternatives are out there that can overcome the problem of access to collateral? And I'll mention a couple of examples of solutions that have been tested throughout Africa. So with these decisions about, for instance, finance is going to affect the capital and labor decisions, and then it's going to affect the gender differences in firm performance. So key now is, what can we do about that? What policy and decision makers can do to eliminate the gender gap? Fortunately, the Gender Lab, other institutions throughout the different countries in Africa have been testing different programs and policies and actually evaluating whether they work or not. So the report tries to be a bit rigorous in that sense of trying to identify credible evidence. So this would be interventions that we know from at least 2 impact evaluation studies in Africa that they've shown to be effective. We also identify emerging evidence. These will be areas or interventions where other countries in other regions of the world have implemented, evaluated those interventions and shown to be successful to help women entrepreneurs grow their business, or that we have some early evidence maybe from one study in Africa, and that we want to do more of those studies and more of those interventions to learn more about. The report also identifies things we know that don't work, that we've been testing and evaluating throughout different countries in Africa, and that we should probably not pursue going forward. So this is a whole set of different areas of intervention. So I'll mention the credible evidence. Within the credible evidence, we identify 3 main interventions to scale up. These are things that have been tested, they've been evaluated, they've been implemented in multiple countries, and have been shown to be successful for women entrepreneurs to address those gender gaps that I mentioned initially. So the first are trainings that apply lessons from psychology to encourage women to act with entrepreneurial mindset. The second are supporting women with secure savings mechanisms. And the third is to address the big capital gaps by providing large cash grants in the context of business plan competitions. So I'll mention one by one. On the first one, we're thinking about interventions that are around skills, but can bring the right set of skills to the target group of women entrepreneurs in Africa that can have the potential to grow. So there was before a few studies that have shown that traditional business training was not very successful in helping women-owned firms grow in terms of business practices, but also, and then from there, grow in terms of their businesses. So what people were thinking about was new solutions. So maybe it was because we needed some other intensity of training, or maybe we needed to teach them a different set of skills. So thinking about different set of skills, different groups of people have started more or less at the same time, different interventions that think about these skills to think more like an entrepreneur. In particular, in a study that we've been involved in Togo, we worked with a group of psychologists around the personal initiative training. So this will be to scale with 500 entrepreneurs, a training involving being self-starting, future-oriented, persistent, proactive mindset. So this is about the entrepreneur understanding that they're going to face a lot of obstacles, but they need to plan and think about how to overcome as those obstacles come into play. If finance is a problem, where can I find a solution outside? Can I share some of the finance with my colleagues nearby? Can I do some trade finance? Can I use some personal resources and save and so forth? So try to find solutions that are creative and can overcome the obstacles that we're going to face in the business. And we compare that to the traditional business training, which would be about marketing, HR, access to finance in general. But we also compare that to a randomized controlled trial against a control group that didn't receive any of these two trainings. And what we find is that for women entrepreneurs, the personal initiative training had a large growth in profits, over 40% over a two and a half years period, while the traditional business training versus the control group only had a 5% difference, which was not significant. So that was a first test, but then other interventions in other countries showed that providing this type of gender-informed, psychology-based, mindset-changing entrepreneurial training can have large effects on growing existing businesses of women entrepreneurs across African countries. So that's an important lesson, and a lot of programs in a lot of countries are now scaling up a lot of this intervention. Secondly, we have a second type of intervention that to scale up, which has been tested directly and indirectly through banking services. So apart from credit, another solution is around savings. So in this case, I'm showing an example from Malawi where we were working around business registration. So we actually found a way of helping a lot of informal businesses get registered, but we also found that that alone was not sufficient for them to change financial services practices, to go to a bank and actually open a bank account or get credit or get insurance. But when we combine the support on business registration with a savings that allow the women entrepreneurs to separate business from household money, that had a large effect on business performance. not only on sales, but profits, because now women were entering the SME department of the bank. They were able to get new financial products, including insurance, which was probably non-existent, was almost non-existent before for this type of businesses. And then we also see that in other countries, for instance, in Kenya, with the growth of mobile savings solutions, there is an opportunity to actually scale up a lot of these interventions that build savings, so that women start having more control over their assets, and perhaps and through that invest further in their business. So this is an important intervention to continue scale. And then finally, as I mentioned, to address the capital constraint, there is an intervention that was initially tested at scale in Nigeria, where David McKinsey did this study on a business time competition, and there the importance was the identification of high growth entrepreneurs, male and female-owned high growth entrepreneurs. And through a business plan competition, they were able to provide large grants. Over 1,000 businesses received over $50,000 of a grant. And then through that grant, they grew or started started businesses. And that had not only impacts on sales and profits, but also on an area that is typically very difficult to change, which is employment. So women-owned firms against a control group, again, which is comparable, which had a very large impact in terms of growth of their business. So these are interventions that are also now being scaled up across countries, in Kenya, in some other fragile countries, or like Guinea-Bissau, but also Cote d'Ivoire, Senegal, and a number of other countries across Africa. Then I mentioned credible evidence, but I also mentioned emerging evidence. So within emerging evidence, we have identified 9 direct interventions where we are hopeful that they can be successful, but the evidence so far is from either other regions or maybe just one study in Africa. And so these are areas that we want to do more research about, but at the margin would be areas that would be encouraged to be scaled. And this includes, for instance, on the issue of time, providing childcare services to entrepreneurs. There is good evidence about the importance of that for not only the children, but for women participation in the labor market. But here, remember that the problem is about the entrepreneur. So there's not a lot of evidence about the actual impacts on business performance. And so that's where we would want to have more information about. But then there's areas like legal reform, land, which cross-cuts with another area on agriculture, linkages, networks, women-friendly trainings, in-kind grants, and then to address the financial constraint that I mentioned, using collateral, alternative collateral requirements, for instance, psychometrics tests instead of collateral, so that women can potentially have larger amounts of their loans. So the report discussed all of these different interventions and a number of others where we have either limited evidence or the evidence show that there is no impact. So the importance going forward is that we can combine different types of not only innovations, but interventions and knowledge, so that we are successful in growing women-owned businesses and address the gender gap in business performance. So it's the work that I think this report brings is provide a good stock taking of what we know, what we can do about that, and how to take this thing forward. And I guess going forward, what we all need to continue working on is combining a high presence on policy programs with innovation, with knowledge, and building on this type of frameworks so that we can actually have more successful, more impactful interventions throughout Africa and address for good the gender gaps in business performance. Thank you very much, and very happy to answer any questions you may have.
Thank you very much. Before we go to the questions, and we already have a few, as you've heard the phone ringing on here, obviously they're calling in from all over the world, but I wanted to introduce Natalie Weiser from Swiss Agency for Development and Cooperation. She's the policy advisor for financial inclusion there, but more importantly to us this morning, she is a very active member of the Donor Committee on Enterprise Development Women's Economic Empowerment Working Group. So Natalie, welcome back. I know there were some phone problems earlier. We would love to hear from you.
Hi everyone, do you hear me?
Yes, we do. Fantastic.
Ah, so glad. Hi everyone. Yes, please excuse me having had these troubles with the, I don't know, there were some IT issues that I'm very glad that I could join. Thank you so much, Francisco, for the interesting presentation, and also Wade for doing the moderation. I have to say I have been on and off. Unfortunately, I have been kicked out of the webinar. So I would like to directly give the floor to the participants to ask the questions.
Fantastic. Thank you, Natalie. Welcome aboard. Let me start with one that we've gotten from Stacy Irwin. She notes in the personal initiative studies that Togo gets a lot, gets held up an awful lot as a very successful, but there's an Ethiopian variation on this that was not so successful or didn't have quite as much of an impact. Can you talk a little bit, Francisco, about the Ethiopia case, what might differentiate it and what might bring it to also be highlighted for the learning we can get from it?
Sure. Should I start, or if?
Yeah, go ahead. Yeah, I'll just give you one at a time.
Okay. Thank you. So these type of interventions were evaluated here in Togo. There is expansion in Latin America. There's other interventions that are not necessarily the personal initiative, but are others that are gender-informed, psychology-based training in Kenya, for instance, which were successful, and so it's building on that various evidence that the recommendation is written in the report. Of course, as new evidence is considered, this is also part of that. So Ethiopia is mentioned, and not only, well, there were, as far as I know, two, and I was directly involved in that. So as far as I know, two interventions happening at the same time. One which was proven quite successful, and the second one which was trying to integrate this in a more TVET style training, where which didn't have any impact. So the lessons that I think the researchers that did this other study concluded on was that perhaps the trainers, how the curriculum is passed, is a key area, and I guess that's a general point that a lot of the trainings and skills development programs out there phase. So there's no one size fits all in terms of training, in terms of skills development, in terms of education systems. And so it's very important that we think about not only the content, but also how to deliver the content and how intense and what kind of skills and trainers do we have to put in place. And although this is an evidence from one country, I would think just from experience from other types of training, this sort of general lesson is important to take into account.
As we all are, it's been decades of this problem. What kind of solutions are you seeing to the childcare access issue, if any?
Sure. No, I think the solutions. I mean, there are two typical solutions being developed, and one is a more formal childcare services, and the other one involves community level childcare services. I mean, with the same objective.
Yeah, that's fine.
There were multiple people. Sorry, I'm hearing someone else.
Oh, sorry, that's the background for me.
And so the point about being emerging and so forth is that although we have evidence from multiple countries about the importance or this kind of solution working so that women participate more in the labor force, that's been like the focus of the research studies so far. As I've mentioned, for entrepreneurship, that's not really a problem. So addressing childcare to have more women become entrepreneurs doesn't really change the gender gap by itself. So what we need is actually have an evaluation of whether just the traditional childcare services provided in different settings is successful in having women dedicate more time to their business or feel more comfortable in the time that they're there, or not be overwhelmed by having to do multiple things at the same time, which you've seen anecdotally to be kind of issues that probably play a role here. So it's only, I wouldn't say that we need to invent a new solution. We just need to actually make it more at scale and test for entrepreneurship specifically, or focusing on existing women entrepreneurs. Can we provide them with childcare services and evaluate whether it works?
The childcare services may not be that big an issue, but for success as an entrepreneur, maybe the unpaid care burden is problematic, and we haven't really focused on that. There's a quote I like from a GIZ study of Ghana a few years ago where they were looking at entrepreneurship, and they found an inverse correlation between profitability and having to do all of the housework, which put it pretty well. Is that more or less what you're saying, that we don't have that strong a correlation between becoming an entrepreneur versus entering the workforce is a problem? The question is how the impact on growth or attention or time availability.
Exactly. I mean, of course, children at this stage, and a lot of discussions in that space have shown, I mean, somehow are taken care of. But and people may even say that that's not really an issue. What we're just saying is that we don't know whether it is really an issue on the business or not, because suddenly, if I go talk to a woman entrepreneur and the children are there running around and she's taking care of that, maybe she's not taking the same decisions than she would if she would feel that the children were well taken care of. And so that's kind of like where maybe some of this will be about. Or instead of using older sisters or brothers as childcare providers, then using a more formal system, and perhaps that will allow the mom to have more time and dedication to business and even further away from the household, for instance.
Got it. Thank you. Christina Schmidtman noticed, as did several others, I am sure, you looked at the crossover when women cross over to male-dominated sectors. In your charts, you showed that the women are actually doing even a little better than men in that. I see you're heading back there. I think it was by 1% or 2%. There we are, $4. Average monthly profits. She noted this, they're doing better, but that's despite the fact that they invest less capital and labor. Any comments on that?
Two things. This difference is not statistically significant, so as being larger. So we can assume to be equal, because this is one group data point, so just if we do this multiple times, we sort of would find that the difference to be pretty much close to zero. Now, what happens is that not by definition, not a lot of women are crossovers. So crossovers being a women entrepreneur in a male-dominated sector. If it wasn't a male-dominated sector, then they wouldn't be crossovers. So what happens is that we do have, and here we're not discussing this in detail, but in the report comes across more in detail, and there are specific studies like the Uganda one that talk about this more. So the group of women that do operate in these sectors tend to have more or less similar characteristics to men in terms of capital, labor, and performance. They do have more capital, labor, and performance than women in traditional sectors. So then the studies try to understand is what is different about these women crossovers versus the non-crossovers. And what we found was that it wasn't so much that they were more educated or they had more access to finance or that they were more entrepreneurial if we measure through different tests. What we found was that they were exposed to those sectors early on. And by being exposed to those sectors by male role models or older siblings, that allowed them to enter into a male-dominated sector and perform as well as men. And so this is good for policy because now we could potentially replicate what happened in reality by actually providing skills, training, exposure, information about these male-dominated sectors and have women enter into those sectors. So that's what we're trying to do in a couple of countries, including Guinea, where we're evaluating whether that actually has an impact on having women enter into these sectors from a policy perspective and perform in those sectors. So that's where the research is going on that.
This question in. How can financial institutions, from what you've been seeing, be motivated to develop products for women-led enterprises? And I might say, to what extent are they missing an opportunity by developing products for what may be unique needs of women or women's sectors? And is there anything we as the development agency can do to help them develop things that meet women's needs specifically, not just borrowers' needs generically?
Well, I think the first good news is that I think financial institutions across Africa are doing much more than maybe in previous years about it, and trying to find solutions that work around the issue. So thinking about, for instance, the collateral question. So this is a situation that, I mean, we can cry a lot about. We can do a lot of long-term reform, but we need to find immediate solutions to help women grow. So some financial institutions across Africa, for instance, doing this psychometric tests, which have shown basically when you do at scale that with a psychometric test you can know with some degree of confidence the likelihood that the entrepreneur will repay. So then some of these microfinance and banks are doing is developing that at scale with different organizations, and then using that to basically replace the need for collateral, or at least replace partially some of the needs for additional guarantees, because it's not going to be overnight that women will have property registrations and in their names and then can use that. Of course, there's more being done there on land and other things, reform, but there's still a need to be more innovative even from the financial institutions. Another area is on movable collateral, which again is not a gender-only design, but a lot of countries are introducing legislation and trying to implement interventions that can help banks use accept movable collateral. This could be, for instance, for women entrepreneurs, inventory or machinery, or basically sales contracts that they could use as collateral instead of the traditional property collateral that the banks are using. So more is being done. I guess we, as development institutions, need to continue to pursue and need to continue to help them innovate. And I guess there's a question later about technology, and this is where one area where technology is definitely breaking a lot of the ways things are being done, especially to reach small-scale entrepreneurs throughout Africa in very rural settings. And then again, I mean, we're thinking about finance, but we're thinking about savings, we're thinking about insurance, we're thinking about multiple solutions using to even basically have credit history and so forth. I mean, we can carry on forever on a number of things.
Well, I want to come back to that, but I'm going to take an opportunity. You mentioned one of my favorite subjects, which is collateral lending based on movables and intangibles. And I just want to throw out to everyone, this is something that we are working on increasingly again at USAID. The World Bank Group has been leading this in many ways for decades. But there are a number of countries where they have adopted the legislation, they have created the registry, but the uptake has been very slow. And USAID is trying to take a look at why that is and to move from creation of these systems to uptake. Primarily, our focus is on women's access to finance, but this obviously benefits everyone for the countries where it's working. I love to note that the U.S. economy, which is not comparable to the Malawi economy, I know that, 60% of all of our commercial lending is based on this kind of collateral. It's not based on real estate. That's only 20%. And in most of the developing world, 20% is based, 80% is based on real estate. And we've got an opportunity to unlock a good bit more. You mentioned, I will let Mylene weigh in again on the chat box if she feels like you hit her technology question. We can come back to it because you addressed a bit of that. But Fuzia was asking for feedback on how to promote women cooperatives in rural areas to create new women-led enterprises, whether you've done anything there.
Okay, so this particular report is about non-farm entrepreneurship. So typically more urban than rural. We have another report that from a couple of years ago called Leveling the Field, which is specifically focused on agriculture. It's not that I won't respond, but just to preempt why so much of the urban, I mean, a lot of the interventions and what I've been talking about has sort of more of a urban setting. We do mention here and there in the report about the land and some other cross-cutting issues. I mean, all the labor market is going to affect entrepreneurship, but we try to separate. And here we're talking about specifically existing businesses and entrepreneurship in Africa. So now on women on cooperatives, which I've worked in multiple settings across Africa. I mean, the first thing to say is that it's difficult to set them up. Women-owned or women high presence or male, typically the associations, cooperatives at the rural settings in specific value chains are long years of work for a lot of agencies, and I'm sure all of you have been involved in a number of these initiatives. And it's I wouldn't say we have a magic bullet beyond the traditional that it needs to be high intense. The importance is to build trust. People have to see what's going on throughout. There has to be high transparency. There has to be high understanding of the ownership. So in a lot of programs in rural areas, for instance, the land now belongs to the cooperative. So members start believing that they can actually benefit from it. And then they need to organize and relate to opportunities going forward. I mean, the cases that we saw more successful, and here I'm talking more from my general private sector development work, were that when we were able to link existing or even new cooperatives with medium to large scale agribusiness firms. So when there was a win-win situation where the agri-processing firm needed to work with farmers, and farmers needed to sell their product and wanted to do in a more scale production. Of course, that is going to depend a lot by type of product, because some products side selling are easier than others. But what we saw, for instance, in Guinea-Bissau, but I also seen here in Mozambique, is in areas like cashew, people would be willing to be part of a group and selling at least some share of their production through that cooperative mechanism. When they actually see the factory and they actually see that this is part of actually helping other people in the country work in those factories and be part of a bigger thing that has the potential to grow. So, but that's just my understanding of it.
I recommend, as Francisco has said, sorry about that, I do that a lot. Francisco has said, you can reach him at fcampos@worldbank.org for more questions. And to the extent I've said anything to pique your interest about what USAID is doing, you can certainly reach me at wchannel, 2 N's, 2 L's, at usaid.gov. And I want to thank the Donor Committee on Enterprise Development, and especially the Women's Economic Empowerment Working Group, Amy Rice and Jim Tanburn, for putting this together for all of us. Greatly appreciate your participation, and thank you very much for this very practical report, Francisco. This is the kind of thing we need for our programming. Much appreciated, and we look forward to the next.
Thank you very much for participating. Thank you, Amy, and others at the DCED for organizing. And as I said, we're all open to any other questions and follow-ups you want to have about this. This is a very important topic, as you know, and we're very keen to continue working on it. Thank you very much.
Right.